The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for the vacationing Larry Pesavento. My pleasure to be here. My show is at 11 o'clock till noon. That's called the Tiger Technicians Hour. So my pleasure to be sitting in here for Larry and trade what you see. Let's look at the E-minis. The E-minis are up 3.25. It's going to be so fascinating based on the Chapman wave methodology. I'm going to go through this in a moment as to what happens next. Yeah, let me explain what I'm looking at. The E-mini, on the left here, this is the daily, this is the weekly, and I've got the 120-minute chart right there. Usually it's a much smaller chart. In this case, because I don't have enough information on the monthly, I've got it on the 120 here, and the monthly, I could go to the ES continuous contract. That'll give me the monthly, and it gives you a different picture. And yeah, I'm going to explain each one in separately. On the daily chart, that what we're looking at is, in the Chapman wave methodology, I should have prepared this before, and I'll do it right now as we're speaking. Let me just go click, and while that's coming on, I'll explain. The objective is get you to 4 higher peaks. I label them alphabetically: peak A, peak B, C, D. They can even go to E, F, and G. Just like on the piano, you can go C, D, E, F, G, A, B, C, but there is no H. And the same thing here. So you've got your 7 letters, and you go from the lowest identifiable low. The last peak that was made was peak D in the daily chart of the E-mini, way back on the 24th of June at 2119.50. Pulls back to 1982.25. And then it starts a move that goes peak A. Then it breaks above peak A by 25 cents, starts a leg B. That B becomes a floating letter, and it stays there until it becomes an actual peak because there's a lower high bar. And then all of a sudden you see on the 14th of July at 2168, round number, you pull back for three sessions, and then pop, you go just above that, you go 25 cents above it because it moves in 25-cent increments, and you start leg C, pull back, and you go to a D. Pull back just again, very small. Look at that black line. That's called the 9-period exponential moving average. Holds it beautifully. These technicals here are the MACD, the moving average convergence divergence. This is the weekly, this is the stochastic, and that starts to weaken a little bit, goes to DE, pulls back, has its sharpest pullback. But wait a minute, it isn't all that sharp because it goes only from 2177.75, and in one session it goes to the low of 2141.50. No big deal. 200-300 points, pulls back, starts a new move to the upside. Now here's the question in the Chapman wave methodology. Technically, if I just go alphabetically, that should be an F. But there are things that can happen here that can have it what we call recycle. So that could become, in fact, F/A, and F is negative, A is very positive. It's not, it's like saying you could go up, but you could go down. I mean, that's pathetic. So all I do when I'm in that situation, if we are long, actually we're long the Dow from last Wednesday, I believe it is, just after the opening. If you are long, then all you have to do at this particular point is a little yellow light flashes, and you have to start becoming a bit cautious. Just make it as simple as that, right? The technicals are fading somewhat, but they're not ugly, but they are fading. The MACD's down, the stochastic's still over 80%. Your technical books on market analysis would suggest that they almost always say that over 80% is overbought and under 20% is oversold. I say, oh man, that's just a misrepresentation completely. I can show you thousands of stocks that when they are, or indexes, that when they are trading above 80%, that's really bullish. You want to stay above 80% as long as possible. All right. So what would make this absolutely an A that goes to a B or whatever it is on the upside. A really powerful move. You can't just have a nominal move in the E-mini to 2186. You're at 2180 right now, and then start to fail as the Dow makes its leg D. I'll explain that in a moment. So here's the weekly chart. You see this inside Chapman wave, inside track repellent zone. Every time the E-mini's gone into that, it started to stall. Doesn't mean to say it breaks down, but it stops. It just gets, it's like a tube, and it gets to the top of the tube, it just can't break out to the upside. So that's why I'm saying 2186, 2188, 2190, all of a sudden you're breaking out, and that's very positive. But wait a minute, the weekly chart, the monthly chart is very positive. I'm calling this B and not E/B because the MACD is about to turn positive. The month is not even halfway through, so I shouldn't say that. It looks like it could. You had such a sharp pullback from that high of 2091 back in July down to the low of, let's say that was 1786, and like a restart in the stochastic, which is way up in the 94% area in the monthly and 97% in the weekly. I have to consider this as very bullish, and any pullback that we have is going to be sharp, quick, and then I think we move back to the upside. That's what I'm thinking. All right, now let's get back to the 120-minute chart. I'm going to go to the ESU so we can update everything, and then ESU is suggesting there should be a test of the 2183s, and probably it'll happen later today. That's my thinking in the meantime. All right, so now we want to do a couple of other things. I want to, just because the market hasn't opened, I want to go quickly to soy. Let me move this away. I got into the 120-minute chart. So soy continuous contract had a very strong move from the low in the 826 area, and it went all the way to 1180. And it's pulled back quite sharply. There's that peak D. We're always looking at that fourth highest peak. There's the peak D in the weekly, fourth highest peak. And this went to a D and then a quick E and an F, the sixth highest peak, and pulls back, comes all the way to a trough G. Trough G, that's the, that is on the downside. Look, it's 1, 2, 3, 4, 5, 6, 7. If you look at Steve Rhodes' work, he's computed the Chapman wave in a certain way, where he identifies the loan and he puts in the letters, and he talks about the G very often. Steve's going to be having a webinar tonight. Tonight. It's on candlestick charting. If ever there was an expert in candlestick charting, Steve is really the expert. Please attend. I think it's going to be just to your benefit, an incredible amount of information he's developed over the years. And look, here's a little doji. I call it the silent doji, that second doji right there. And that says you could have a very nice move, a reversal, and you have in the soy. And soy is trading right now at 991 3/4. And it's in leg. Why is that an E? That should be an A. I'm sorry about that. Edit, A. And in this particular instance, what you do want to see, at this point, it'll actually be nice to have a little bit of a pullback to the 985, maybe even 981 area, and then a very sharp move that takes the soy to 1010. If it can do that, that's very positive. If it fails from here, that's not so positive. I'll be back. We'll be looking at wheat. We're looking at high-grade copper. And what's the time? Yep, 9. We've got plenty of time. I'll be back. Basil Chapman sitting in for the one and only Larry Pesavento. This is Trade What You See, and I will be back straight off these important messages.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back. Basil Chapman sitting in for Larry Pesavento. I believe we've got Gator from Franklin, North Carolina. Gator, how are you?
Hi Basil, how you doing? How are the grandkids?
Oh, everybody's good. Thank you very much. Actually, my granddaughter just had her tonsils out, so but she's going to be fine. She's a real trooper.
I didn't know they still did that.
Yeah, neither did I. I was reminding her that I had that done at her age back in Cape Town, South Africa. In fact, I went to a monastery. They turned the monastery into a kind of a nursing home type thing. I remember it well. I remember having the ice cream afterwards. That was the most important thing. That's the only thing I can remember. So you'd like to look at?
Well, the ES chart. I was noticing on your daily chart and your weekly chart, the numbers are different. In other words, on the weekly chart where your wave C is?
Right there on the week of the 24th of June, I have 2119.50. What do you have?
Well, where your C is on the weekly, okay, that's the same number as your B.
Oh, no.
Well, according to the chart there, yours is 0.25 higher. But if you go to the daily chart where your D is, on the daily chart, it never got to that number on that week.
Oh, my. I didn't even realize that. Let's do this. So I've got on the 24th of June, I've got 2119.50.
Right, and the other was 2119.75.
Oh. So wait a minute.
On June 9th, it was
oh, yeah. No, wait a minute. Wait. Can we do that again? On the week of June the 9th, I've got 2110.75.
Okay, on all right. You're looking at the daily or the weekly?
I'm looking at the weekly. Let me go to the daily.
Yeah. On 6/6, the week is 6/6. The high was 19.75. but the high on the week is 620.
Really? No, I don't have that. I have 2110.75.
Right, point 0.75.
Yes, but that's
But then
2110, and the other one is 2119.
Well, I have a different number than you. And on the daily, see, the thing is, the daily numbers and your weekly numbers, they're different.
So
If you look where your wave C is
right.
on that week, and then go to that corresponding week on the daily, I believe that it didn't get that high.
Oh no, I do get that high. Look, yes, 2119 on the week of the 24th of June. And let me just move this over to the side. And folks, the reason why we're making a big deal about this is because we go by the numbers. And here it is, the week of the 24th of June, I have 2119.50.
Right.
And the week of the 8th of June, I have 2110.75.
Right, 0.25 higher.
Oh no. Wait. 1075 is lower than 1950. Isn't that what
Right.
you know what I mean?
On June 24th, I've got 2119.50.
Yep, correct.
And on June 8th, I have 2119.75.
Okay, so that's where we differ, because I've got 2110.75.
On the daily?
On the daily, yes. I'm not sure, but I would suspect. What are you looking at? Also Trade Station or what?
No, I don't have trades. I've got Thinkorswim.
Okay, so
your charts and my charts on the 120-minute are different because
yes, because you start the hour.
Your time is 30 minutes different than the charting system.
Because you start at 30 minutes either later or earlier.
Right.
Okay.
Right.
But 9 points would be huge. I don't remember it going to 19 at all. And I'm going to do this. Let me just do this ESU
on
16.
On June 8th?
Yeah. I don't remember that at all. In fact, I've got it here on both systems, the continuous contract and the other. And we've got 2109.
Okay.
Yeah.
Okay. I would just the only reason I brought that up is that you on the weekly. I'm sorry, on the day. On the weekly you have us in wave D. I have in wave C, which would, to me, I'd be looking for the D. So,
yes. So
I'm looking for a higher high. So I think.
So what I like to do, Gage, is what I like to do in this particular instance, I like to check it with my cash index. And the cash index corresponds exactly to what I've got. That on the 22nd, the week of the 22nd and the weekly is 2111.05, and then it goes to a higher high of 2120.55 on the week of the 10th, and now we're in leg D. So, and this corresponds, I like if there was a difference between the cash and the E-mini, I'd say, whoops, there's a mistake. So I think I'm going to stick with this right now. But it does create a problem, not always, but just once in a while, where there is a difference in platforms. I happen to, because I've used TradeStation for, well, ever since it was, what was it called before? Supercharts back in the 1980s. So I've used it for forever. I just find that I'm very comfortable with their data. Their data seems to almost always, if there's a change that's going to be made, it kind of goes towards what TradeStation is thinking. Maybe not 100% of the time, but enough for me just to say that I'm a little more confident that this is correct. But either way, what happens in the coming 3-4 days is going to be really important, whether or not we're getting a short-term top or whether or not we're going to recycle higher.
That's exactly what I'm looking for, too. I'm thinking we're going to run up here a little bit more, and then I think we're going to roll over. So.
Yeah. Oh, so that's kind of my thinking.
Ride the lungs a little bit longer.
That's it.
Real good. Listen, Basil, thanks so much.
Thank you very much for calling, and thanks for pointing that out. I'll be looking at other people's software to see what they've got for that whenever it comes about. But thank you very much, and I'll let you know if there's an error in my side or not. Okay, thank you very much for calling. That's Gator in North Carolina. Now, let's do a couple of other things, folks. I wanted to go to high-grade copper because high-grade copper was acting not very poorly, but it just wasn't acting well. In other words, it was coming down from its peak E-top in the daily on the 13th of July at 2.27, and it pulled back to 2.14s in leg D, and now it's having a nice bounce. But most importantly, what I'm looking at is why I'm focusing on high-grade copper is a pattern that I look at that goes from a lowercase h, you see how it comes down, makes an arch formation, successful test because it never broke that low of the week of the 22nd of January, and then it ran up, but then it stalled. So it's going to be really important because if in the next week, high-grade copper is able to spike above the week of the 15th of July, 2.2775. That's going to be very positive. But if it starts to pull back and it takes out anywhere like 2.09, it says, whoops, be careful. It's going to retest that low at 2.016 made on the week of the June the 10th. But it's the monthly chart that really has me worried about some of the commodities. We'll watch it closely. So now we've got the music coming up, meaning we've got a break. When we get back, probably the market's about to open and we can go into the nitty-gritties of the market, and I'll talk to you about what I'm looking at. Basil Chapman sitting in for the one and only Larry Pesavento. I'll be back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman sitting for Larry Pesavento. Let me do a couple of things. I was asked about feeder cattle. Feeder cattle is in that leg D. Let me just explain what that is for those of you just tuning in. In the Chapman wave methodology, you try to identify the lowest, most obvious low bar, and you merely count each successively higher peak, even if it's just a peak by 0.01 over the a leg 0.01 over the previous high. Well, it depends on what you're trading, of course, 25 cents if it's futures. Here we go. So it's A, B, C, and the fourth highest peak where other things can happen. All right, just make it as simple as possible. After that, it becomes a little more complex. So here's your leg D. And the feeder cattle trading at 149 up 0.20 suggests that the 200 period exponential moving average, that pink line there, or cyan colored line, at what have we got? At 151.93, that's going to be key. And what's very important about it is that the weekly chart has started, it went to a lower low at 132.825, 132.7. So this is a leg A in the weekly chart, and we've got in the monthly chart that 9-period exponential moving average, strong resistance right there at the 150.40 area. So yes, I like what I'm seeing. If you're a long feeder cattle, I'd stay long. What I'd be looking at is 145 is the 9-period exponential moving average support. Let me just do a 120-minute chart. This is peak. This is A, B, C, D, E. Yeah, so there could be a little bit of a pullback here. 147.70 is a very near-term support. My thinking is that it'll consolidate and then it should have a little pop to the upside. That's going to be very important. So a close below 144 says be careful because there could be a change of trend to the downside. So far, it's acting very well. Feeder cattle. I'm doing the continuous contract. I never trade this. I'm only looking at the chart. So that's that. I went to high-grade copper. Now I'm going to look at crude oil. I had a couple of questions about crude oil. Crude oil is acting quite well. It's up 14 cents at 42.91. And a couple of things are going on right now. What I'm looking at is within the context of the weekly chart, that support that we looked at the other day, I'm going to make it a little lower down now because this has become very important. The low of the week of the 8th of April at 38.50. We're trading right now at 42.92 because when we came down from that peak D top in the weekly chart, see how important those Ds, the fourth highest peak is? We came down and went all the way down to 39.19. That was above the 38.50 level of the week of the 8th. So that last week, the bounce that we've had subsequently says it's really important that there's almost like a V-shaped recovery, and that V-shaped recovery suggests that crude oil will sustain the rally only if it's able to break into the 45.50 to the 46.30 area in a V-shaped pattern, which should go into Friday's close. That's how important it is, because if crude oil starts to falter and it takes out 41.30, that's going to make that U pattern that says, "Oops, failure, be careful." So, and the monthly chart, you see what I'm talking about? That monthly chart, it's the same sort of thing. Many of the commodities have this nice strong leg A, and then it starts to fail. But if it's not strong at all, if you're putting it into the context of where it came, just back in June of last year, a year ago, it was just over a year ago, it was at 120. And then it dropped down to 30, what was that low? 32? Yep, 32.93. Bounces to the 52.90. Fantastic percentage gain, but not a big deal if you're looking at the chart. Crude oil needs to demonstrate that it has sustainability to the upside. Okay. Now here's another thing that I want to look at. I don't know if I did the corn. Did I do wheat? Yeah, wheat is it's almost like crude oil. It's had a nice little leg A to the upside at 418.25. It means nothing. And the monthly chart is horrible. Weekly chart is just showing a little tiny bit of strength, not enough. It's really actually showing no strength. It's only showing strength in price, but not in the technicals. Most importantly, wheat has to break. This is the candle, not the candle of a few days ago of 423.5. It needs to go above 435.25. It needs to not only do that, it needs to close above it and then hold support in the 435 to 433 area. Okay, just thought I'd do some of those because, of course, Larry's specialty is to be able to do these different products. And I just want to go to high grade. I said it was. Oh, I want to look at this because it's part of the commodity look. Wood, WOOD. Wood is the iShares Global Timber and Forestry ETF. It finally, yesterday, went to a leg D. The last move was at leg E. I'm looking at this and I'm saying, you got to be careful around here, because although I'm expecting the Dow to go to its leg D above 18,622, just above it, there are a lot of signs in weekly charts that are suggesting that this is this has been a difficult period, and that we've got to be a little bit cautious right here. If we've got longs that have been doing very, very well, that's fine. But what I am saying is that this is a period where, because of the rotation through the different sectors, and that some of the sectors are becoming kind of fully valued right now, you've got to be a little bit careful. So here we go. I want to go back to, I just want to show a particular chart, and that chart will be right here. So this is the Dow 120-minute chart. It has made the D. Remember, D is very important. I'm anticipating that by the end of the day, we're going to find some strength. I hope we find some strength. We need to find some strength. And that if the Dow is able to get to 18,550s and then 18,570s, that's going to be really important on its voyage and its trip to make this leg D, that's the requisite D that's missing in the daily chart. And to do that, we need to be able to walk that 9-period moving average, the maroon line there, and we need to climb to higher highs. And after 2 doji candles, this is actually very weak action. I want to see much stronger action than this. And by noon today, I want the Dow to be at least 40 to 50 points higher. Maybe not noon, maybe 1 o'clock. All right, so now we're going to do a couple of other things. In my overview for the very, very, how can I put this? For the longer term, I'm not going to say the very, very long term, but in the longer term, I'm suspecting that we are still going to see higher highs in the intermediate term, but that there's a chance that we are starting to see something that I call the coda phase. And that is where all the parts, the sum of the parts of all this internationalism, that includes the Japanization of bond yields, in other words, lower and lower yields. Look at this chart for those of you who have never seen it. This is the TYX, TYX.X. This is the 30-year, oops, I shouldn't type it on the chart. Type it in that little rectangle right there, $TYX.X. And I'm going to be discussing this in a webinar I'm having next week. And it'll be on the front page of TFNN very soon, maybe by the end of the day. I'm going to be discussing what are the implications of major international, a down channel that takes 31 years and still hasn't broken to the upside in yields. What is the implication, number one? And what is the implication of the move that we had prior to that, where we had an inflationary aspect, and that inflationary aspect took the Dow, took yields all the way to this high coming up right here of September of 1981, right there. Can we repeat that? Will we have another inflationary aspect? I'll talk about that, and I'll talk about it in relation to the webinar coming up next week. Basil Chapman, Tiger Technicians Hour. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Hi, folks, we're back. Basil, Chapman, Dow's down 1, S&P's down maybe about 1. And we're watching this closely because there has to be a turnaround later in the Dow. I don't know, we could fail and maybe not make that D, but that's what I'm expecting in the Dow. All right, I had a question yesterday and I got a question again today. Somehow they correspond. So the question really is there a relationship between the EEM, which is the iShares of the emerging market index in the ETF, and crude oil? And my answer is I don't see a relationship, although I do see that if crude oil were to rally here, it could probably help the general market, but I'm not sure about the EEM. So I'm going to just look at the EEM and suggest to you, I'm going to go back to that chart of the yields in a moment, but that was a question that came up. I didn't want to skip it. What I wanted to show is if you draw channel lines, a trend line is a single line going to at least 2 points. 2 highs or 2 lows at the edge of each candle or bar. And in this case, I'm drawing one downtrend line, and now I'm going to make another downtrend line. And if they fit exactly, which they do, isn't that amazing? How do charts know to do this? It's just an incredible phenomenon. Here you are talking about 10 years. No, what am I talking about? 7 years. So it could be more, but let's make it, just to be conservative, 6 years. There are 6 years of a trend. And you've got the channel lines hitting exactly the lows. Look at that. 1, 2, 3, exact. Boom. And then the parallel hits exactly to the top. So this is the EM, and it's the emerging market ETF, and it's stuck in the middle of the range. And it's in leg B to the upside in the monthly chart. Not a fantastic looking chart, but it is improving. The MACD is turning up. That's the moving average convergence divergence right there, the green and red lines. And below the green and red lines, the stochastic is at 47%. That's improving. The monthly chart, the weekly chart, I'm sorry, that was the monthly. The weekly chart is very strong at 98% in the stochastic, and the MACD is very good. What we're looking at now is that the EEM has not been even close to the 200-period exponential moving average, this coral-colored line, since it broke down back in June of 2015. So it's over a year, and now it's getting close. I suggest to you that it's getting close to touching it, and I'm calling it leg E. I could give it an alternate count, but it's E for now, and that it should go to 37.89, or at least get real close. It's at 37.30 right now. and that the daily chart, and this is the big issue here, this is very positive, the way it broke to a peak D, a second very quick peak D. It did one, then consolidated and went very quickly. ABCD pulls back sharply and then screams to the upside, which is E/A. This is more conducive to thinking of it as a brand new leg A than an old E. But a lot of information needs to be imparted over the next 3 to 5 sessions. And so far, I still have to give the alternate wave count, but I do say that a 93% was stochastic strong and the MACD is good. So the EEM, I mentioned this in one of my shows about 3 weeks ago, the EEM was starting to improve and it's still improving, still acting much better than one would expect. And now I'm going to go back to that chart. Yes. So EEM starts to fail if at 37.31 in the next 3 weeks, it breaks under 34.50. That's going to be a negative. Okay. Now, a couple of things I want you to do here. I just want to click again right there. What I want you to do is this. Within the context of the TYX.X, this is the Japanization of our bond yields. You can see by the way the 30-year T-bond interest rate yield at 22.32, that's 2.23%. You can see that it is making H patterns, those arch formations. So far, the 22.26 low that was made right there, January of last year, was just 22, what did I say, 26, and the recent one is 21.02. It was taken out, and the trend is the monthly chart. The trend so far is still down. We're going to be watching this closely because if in the next 3 weeks there is a turnaround in the market to the downside, the Dow drops more than 800 points, say, I would not be surprised to see the yields rally and 24.96, let's call it 25.10. 25.10 will be an area that suggests that yields, in fact, could go up quite a bit more. But in the meantime, back at the ranch, let me show you this chart right here. This is I show it to my subscribers to my opening call. This is what I call the triple yield chart. This is the 30-year, the white one, went down to 21.01 and it's bouncing. It hasn't gone above peak A right there, which is at 23.59. This is the 10-year, the brownish one. And that's still pulling back, went down to a low of 13.36. And here's the 5-year low, and it went down as well. So what we're looking at in the context of the yields is that the downtrend is still intact in all 3 time frames. That's the 30-year, the 10-year note, and the 5-year note. So I wanted to bring that up. And then just as a matter of because Larry loves to do the commodity, Larry trades the commodities all the time. I wanted to show the South African, because of gold, South African stock market. This is the Dow Jones South African stock market. It's not, these are not the numbers. It's pretty much the shape of the pattern that you'd be looking at, but it is not the actual price. This is at 371. I don't know what the South African index is trading at right now, but this is the pattern. And it's had a huge leg A and a leg B after pulling back very sharply. But this is more than this is almost a 63%, 66% gain. So in terms of the markets, international markets, is going to be very interesting. Can the international markets start to recover very nicely? If we look at the Dow Jones, I do not have the actual, this is the UK, I believe, DOW. No, it's not. It is the dollar GB, Great Britain. There it is. This is that same leg that we were looking at in the EEM. I love the strength of this single leg to the upside when it could be an F and it could be an A. Because so far, this is suggesting there could have been a recycle. There's a particular technique that I use that's called the Chapman wave falling X. X, as in AX. And that's a breakout pattern right there. And it goes to a 1-to-1 to the upside, which it's just doing right now. And that's suggesting that this is leg D, very strong in the, this is the Dow Jones United Kingdom Stock Index or Fund. And at this particular point, I love what's going on. So I'm suggesting that we've got to be a little bit cautious in becoming cautious, let the market tell us, And at the same time, I wouldn't be over optimistic just yet to say that we could, in fact, skyrocket in this phase right now. But I am suggesting that if this is a coda phase, meaning that we're going into where all the different parts of the puzzle, which I'll be talking about next Tuesday night in my webinar, if all the parts of the puzzle are coming together, then it's not unlikely that we're looking at a situation where declines are sharp, they're swift, and they're steep, but then they recover quite quickly rather than an extended 6-month decline at this particular point. Basil Chapman, Tiger Technicians Hour. I'll be right back. Oh, Basil Chapman, sitting here for Larry Pesavento in Trade What You See. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Basil Chapman sitting for Larry Pesavento. So the Dow is up 8, the S&P is down 80 cents. What's important, look at the USD JPY, the US dollar Japanese yen currency pair, made a peak F in the monthly chart way back in 2015. Above 125, pull back under 100, and now it's trading at 101.24. There's that H pattern that I talk about, down, and then it makes the arch formation, and it's gone. You remember the peak D? Let me show it once again. Here's the Chapman Wave methodology. Identify the lowest low bar, merely count each successively peak, counting alphabetically in sequence until you get to D, then other things can happen, and that's your objective. And then there are different techniques after that. Look what happened at D. It pulls back very sharply, and it looks like it's making that arch formation. If it goes under 101, be careful. It could test the 100 level very quickly. The EUR USD, that's the Euro Japanese, the Euro US dollar currency pair. That's almost the opposite. Made that peak D, pulled back. The MACD was still holding very strongly. This is the technique, the MACD. And the stochastic was holding well, and it's rebounded. So this is a much better chart, the EUR USD. It's gone to the peak D in the weekly chart, and it's making, now it's trying to make, it has made lower highs and lower lows. Now it's trying to reverse that by making higher highs and higher lows. Very important. It needs to get to 1.124. It's at 1.117. Needs to get there real quickly, because if it slides below 111, that's going to be negative. So in the dollar itself, the dollar DXY, there's that H pattern, and that says to me that gold could be bouncing. And let's see what gold's doing. Yep, gold's bouncing. I don't know if gold's going to get to that leg D. So far, it has to go, it's at 1359, up 12. It needs to get to the 1375 level to get to D. And the moment it does that, it's going to try to tackle the previous high back on the 6th of 1385. So for the bias is to say that gold is holding really well. It's working the 9-period moving average in the weekly chart. I would not be short gold. I think that there's enough evidence to say gold is the go-to area. Hey, thanks for being here. I'll be back tomorrow for Larry's show, and otherwise wait for me for 11 o'clock. I'll be doing my usual Tiger Technicians Hour. Stay tuned for Tom O'Brien coming up and Tommy O'Brien. I'll be back in an hour.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.